So that's the argument. Alameda was insanely over-collateralized.
You deposited in this other entity that's also ours, by the way, which means we can just steal the money.
Let's maybe focus on Sam, the person.
The entire time I knew him, he was always like quite fidgety. And to this day, I still think Sam is one of the smartest people I've ever met.
Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and we have a very exciting episode of the show for you folks today. A return guest on the program, Zane Tackett, who's been in the crypto industry for, he's seen it all. B2C2, Bitfinex, and of course, FTX. Sir, thanks so much for taking the time. We appreciate you coming on, especially since you're already 40% the way through Michael Lewis's new book. So we can talk a bit about that. Thanks for joining. How have you been?
Yeah, my pleasure. Thanks for having me. Been doing pretty good. Just kind of biding my time through the bear market, been focusing on sports and waiting for the market to turn around. Exactly.
No better way to spend a bear market than running 50 kilometers through the hills. So congrats on that.
Yeah, now I just have another 130 kilometers in a couple weeks through Morocco. But
something to aspire to for all of us.
Yeah.
So one thing that, you've kind of been one of the most vocal former employees of FTX since the meltdown last fall. Maybe we can start with, and obviously we have the criminal trial kicking off today of Sam Bankman-Fried. When you look back over the course of the last year, what do you think has been the most misunderstood aspect of this entire thing from your perspective as a relatively senior or high profile employee?
Well, I don't know. I think it's changed quite a bit. Like right after it blew up, it seemed like all the media were just reporting like, 10 billion just kind of went missing at FTX, and it didn't really explain how it went missing, that, it was stolen by the founder and the CEO. And so it seemed like, at the beginning, there were all these fluff pieces. And then, I'd say one other thing is that people I completely understand why, but it's kind of invoked to trash FTX. And so people have said, it wasn't a good business to begin with. Like I think CoinDesk wrote an article the other day that had a bunch of massive misunderstandings. Like the Alameda was the other side of every single trade, and that it's wildly inaccurate. And so it just went from this massive theft or fraud from the founder to tainting everything that happened there. And like at the end of the day, FTX did grow to become one of the largest exchanges in crypto, and so it was a valuable business. It was a business that was making money, which makes it all the more confusing why Sam, decided to do the things he did, and blow up the entire company.
Well, it seems like, and this kind of speaks to the controversy around what Michael Lewis said on 60 Minutes, which is that had, referring, I imagine, to CZ of Binance, had rivals not cast aspersions and, had the market not dumped as cataclysmically as it did, this could have been a firm that would have gone on to exist profitably. It would have been in fine shape. What do you make of those comments? Do you think the reaction was maybe a bit too aggressive? Do you think that FTX could have continued or could have operated as a profitable business had this had not transpired?
Yeah, so a few things here. One, I find anybody saying that CZ is what caused this or that CZ is to blame here, it's just an idiotic statement. Like, he had nothing to do with it. The thing that caused it was Sam stealing all the money, right? So like, you can't blame anybody else for that. or you can't blame any other market participants like CZ, or anybody that called that out for Sam having stolen that money. The other thing is that, like, I do think what Michael Lewis said there, it, at least in my understanding, which is if that hadn't been called out, FTX could have continued to operate. I mean, I don't understand why people think that's not true, right? Like, that money didn't just suddenly go missing right before the news came out and FTX blew up. It had apparently been missing for some time, and it continued to operate. So it's just, that bank run, or whatever you want to call it, the people trying to get their money out, that ended up causing the blow up, and exposing the fraud that Sam had. On the flip side, I do think that anytime you kind of cross that boundary to taking customer deposits, like, there is no good end road to that, right? Like, if you're willing to do that, I think eventually it's going to blow up. Something bad is going to happen. Like, I don't see that there's a way of that ending well. So perhaps it's a good thing that FTX blew up before it got even bigger and Sam was able to steal even more money and orchestrate an even larger fraud, because I think anybody that's willing to do that.
Before Sam was able to give Donald Trump $5 billion, give the Bahamian government $10 billion. It's a good thing that it happened before any of that.
Yeah. And, when you're reading this thing, it really does come out that, like, Sam, especially like the Twitter deal, right? Because that was right before FTX blew up. Like, I can only imagine the way that he was trying to put together a bid was looking at the USD deposits at FTX and being like, yeah, I think we could probably bid, we just got a big deposit. We could do 5.1 billion. And so I think at the end of the day, it would have eventually blown up with having somebody that's so carelessly throwing money around that's not his at the helm.
So here's something that I can't quite square. I spoke with someone who was very senior at Alameda yesterday, and obviously I've been reading portions of Michael Lewis's book, and we talked about this before we turned the mics on. There are kind of two theories here, right? Or at least two camps. One being, one of which is Sam and FTX Alameda kind of were a bit operating outside the, maybe we can say, the parameters of what is moral or ethical or legal from the beginning, a fraud. And then the other theory is that something happened. There was this catalyst, this moment, this shit hitting the fan episode that forced them to basically take customer deposits to cover some sort of hole on the Alameda side. But when we think about all the money he was throwing around, if there was this issue, why then go and kind of double down? If the point of taking the customer deposits was to, as is noted in the book, get through the situation of, I believe, Genesis. I don't know if they mentioned the trading firm, but my understanding it's Genesis, recalling the loans to fix that. Why are you then trying to buy Twitter?
Yeah.
Or did that happen before? Did this happen before the, I'm not quite sure on the timeline here. Did that, I know that a lot of those bankruptcies, and the headlines of Sam trying to save Voyager, that would have happened after the loans were recalled. So what is the logic there, to get more deposits?
Yeah. I don't know. I do think one aspect of it is just that, like, if you look at what Sam's saying today, like, he still doesn't really understand what he did wrong. He doesn't understand that just taking that USD was wrong. And he's like, well, if you include the value of our maps and our Oxy and, the FTT and Solana, it was just a spot margin loan, which is just horrendously untrue and, like, completely misses the mark that you're stealing other people's funds. That did not agree for it to be borrowed with any form of collateral or anything. And so, like, I don't think he saw this coming to an end. So, like, he didn't think he was doing anything wrong. So, like, yeah, the Twitter bid, why not bid that much money for Twitter? Who cares? Like, there's that USD there. I can borrow it. Nothing's wrong with the borrow. I mean, that kind of seems to me, like the way that he treated this, like, yeah.
So he was able to sort of do like mental gymnastics to kind of justify the unlimited borrowing. So you're about 40% of the way through. Is there any what's something that's shocked you so far?
So I wouldn't say anything's like really shocking. It's just getting to the starting of Alameda. But a lot of things make a lot of sense. Like listening to Tara's comments about how Sam was as a manager. Very accurate, right? Like he just says like, yeah, if you have any questions, just ask me, but then never responds to like messages, wouldn't show up to meetings. And when you do have a one-on-one, he's playing video games the whole time. So like that's true. And then just like some confirmation where he talks about how he doesn't really feel happiness. He doesn't really have normal emotions. Like everything's kind of faked. He did seem to me like somebody who just doesn't get pleasure from things. And then so hearing like him describe it in the way that he frames it himself explains a lot of things, like the way that he acted and just working for him, like why things kind of were the way they were. It's
an interesting point. Let's maybe focus just a few moments on Sam, the person. This whole sort of, I forget who it was on Twitter. I think maybe Adam Cochran, who's often pontificating. He said he met Sam a few times and he didn't have that sort of fidgety je ne sais quoi about him. To what extent was Sam the external person, as he was out in the media and to the world, dissimilar or similar to Sam the executive or Sam the friend or colleague, coworker, I should say?
Well, again, like the way that he describes things in his conversation with Michael Lewis makes it seem like he doesn't have friends, like he's incapable of having friends. And that is also kind of the takeaway that, I got from knowing him personally. Like he has people that he might be around or whatever, but like just doesn't have that normal sense of friendship or whatever. I don't think he would do that much to go out of his way to like actually expend effort to help like, a friend in need or something. I don't know. But I would say, yeah, all the entire time I knew him, he was always like, quite fidgety and bouncing and, had a million things bouncing around. And like, whenever you talk to him, it seems like you're getting like 5% of his attention and most of his brain power is going elsewhere. And he just sits there and, yep, okay, all right, yep. And then later that becomes annoying because you're like, yo, we talked about this. And he's like, I don't remember talking about this. And it's like, well, yeah, because you weren't really paying attention. Yeah, frustrating work experience for sure.
So on the flip side, though, I mean, he was able to build a company, manage hundreds of people, roll out, launch product, ship product. And there was, to some extent, a business. So how was he able to do that with such a sloppy management style? What were some of the what was he doing right in that respect? Because that just sounds like, it was a recipe for disaster. It ended in disaster, but it also sounds like, you can't get anywhere with that, with that sort of style.
Yeah, so it had, its ups and its downs. The flip side to that is like, I dealt with the institutional clients and like that was completely mine to do so. And, I wanted to change the fees, or like the market making program or things like that. He's like, cool, come up with the idea and then we'll talk about it. And like, so you get a ton of responsibility and there's zero micromanagement, right? So you get a project, you run with it. And I'm somebody who, really hates being micromanaged. And something like sales, it's easy, right? Like go get volume. That's the only thing that matters. I don't need somebody to sit over my shoulder and say, hey, by the way, you should go sign up this large market maker. Like, no shit. Yeah, obviously. And so I really liked that, he chose people that were, good at what they did, and then kind of let them do it. So that was nice. The ambitions of the company, right? Like it was a very ambitious company in a crypto bull market, right? Like make big bets, they pay off a lot of times until the bear market, if you didn't do anything to change. But and so there was a lot of things that like worked very well at FTX, and like to this day, I still think Sam is one of the smartest people I've ever met. You know, he was very smart, and you know, one thing that again they talk about in the book is like he wasn't emotional about things, so he did look at things usually from like a pretty objective point of view, which I think was good, and it allowed them to improve a lot and like not be married to certain things. So there was a lot of things that were done well. I mean, FTX tackled a lot of problems that were present in the industry. You know, the inefficiency of capital and with the multi-asset margining and the cross margining and everything like that. They did that very well, and obviously the market responded to it. Otherwise, it wouldn't have gotten the level of volumes that it did. So naturally,
yeah. You are an advocate, I believe, of a 2.0 reboot.
Yeah, you know, I am generally in favor of it. I think that there is still a gap in the market for the product that FTX was, and you know, people liked it. And I think, you know, somebody like High Stakes Cap, I saw earlier today on Twitter talking about it. There's some very large firms that really want, or firms and traders that want FTX to come back. And I do think that it represents the quickest and most efficient way for people to get their capital back. It also allows people to voice an opinion on, you know, things like if I believe in the value of Anthropic, I can hold on to my debt token if they do something like a debt token. Whereas if I need my capital now, I don't like that, I can sell at a market rate, get, you know, what the market believes my debt to be worth. So it gives people more options in a much faster and more efficient way. And so I think there's a lot of benefits to the people affected by FTX if there was to be a relaunch.
Have you been surprised about how much has been recovered so far?
I mean, no, not really, right? Like FTX is quite a sloppy place with bad accounting and stuff like that. Like I remember one time I found millions of dollars worth of airdrops that they had gotten that they didn't know about. And so it doesn't surprise, like, I don't think it's that impressive that they did it. I think if you would have handed this to like any crypto firm, like if Binance bought them, they would have found all those assets in like 2 days and already had it back to the users. I would actually say I'm kind of surprised that they haven't got more, like the hacked funds. I'm shocked that hasn't come out yet. Who did that?
That is one of the big questions, right? I mean, who could have done that?
The list has to be extremely short.
Who's your top suspect?
I mean, if I had to guess, I'd say an ex higher up FTX or Alameda employee. Because like if you were a current one, like Jesus, like dude, you already know that everything's being looked at so stringently and so under the microscope. It'd just be ballsy to the point of ridiculous to do it. But I mean, the fact that they haven't gotten caught yet, I don't know. I'm very surprised that hasn't been caught yet. And when I talked with Sam about it after, or like when everything was blowing up, he seemed so nonchalant. Like, oh yeah, you know, it was a battle between like FTX US and FTX.com to get assets, and like it's not lost. So I mean, I think he has some information on what happened to it, but I don't know.
So what do you think of the marketplace right now? Obviously, it's relatively in tatters from a credit lending perspective. Genesis is out, Alameda's out, FTX is out, BlockFi's out, Voyager's out, Three Arrows Capital is out. So there's this big gap, and most of the, large firms are now out in Asia. Bybit, Binance, obviously, OKX. Where do you think the market goes from here, from a capital markets perspective?
Well, I mean, I think the drive to decentralization is kind of being pushed upon us by regulators a bit, right? Like, if you make it such a pain in the ass to use products like Coinbase or Bybit or whatever, I think the natural push is going to be to decentralize exchanges. And like, if you see how much Uniswap grew from when it was founded to the last bull market, it shows, how easy, or I wouldn't say easy is the word, but how much traction can be gained in a short period of time by a product with good market fit. And decentralization, the fact that you have to sign in with MetaMask and you have to use some lists and check that you're not trading for the wrong coin or you might get scammed, didn't prove to be that much of a hindrance. And so I think, in the next cycle, we'll see decentralized protocols doing very well. And people moving more and more to DEXs, just because that's going to be what's easiest for them.
This is something that Mike Cahill, who joined the program, former Jump, had to say. The crypto industry needs to start eating more of its own lunch in terms of actually using DeFi trading in a decentralized manner, moving away from centralized venues. But there's obviously the UX, UI hurdles that people face in doing that. It's just more clunky.
Yeah, but at the same time, it's definitely more clunky to do the trade there. But also what's more clunky, going to, perp.xyz, clicking the connect MetaMask button and submitting a transaction, or submitting 7 forms of ID, 2 forms of proof of address, your last 12 months of financial statements. Then they come back and say, this picture's blurry, and we don't like this, and that tax statement doesn't work. And you take 3 months to get onboarded, and then they ask for re-verification. That's more clunky than any DEX experience. So yeah, it's got, it's not as good a UX in some areas and better UX in others. And the experience is going to continue to improve on DEXs as time goes on. So, I think in the end, we'll probably see continuing share of the market go towards DEXs.
Does the book reveal anything about the market outside of Alameda and FTX? Anything about the way, this nascent capital markets were kind of stitched together with tape in some respects?
One thing it does talk about, thus far in the book, I'm only at the point where it's getting to Alameda starting. So it was more focused on Sam's childhood and stuff like that, which, therefore it doesn't really delve too deep into crypto. But one thing that it talks about is how crypto is this thing where it's all, get rid of trust, don't trust, verify. And they ended up creating a financial system where trust is even more heavily involved. I need to trust the exchange that I use for my crypto trading much more than I need to trust the New York Stock Exchange, for instance. And how that's kind of ironic, which, at some point I agree, but I think people miss the point when they say, Satoshi's vision was decentralization. So people using centralized exchanges go against that. Centralized exchanges, in my opinion, aren't against the ethos of crypto. The ethos of crypto is having the option to opt out, right? I can use convenient centralized services if I want to, or I also have the option not to, and I can, take advantage of that option whenever I want to. That's the whole point of being your own bank and having that power, is maintaining the option. You don't have to do that all the time, but if you want to, you can. But outside of that, no, I haven't really gotten too much to where it's talking about the broader crypto industry.
Does it kind of explain his how he sort of got into the effect of altruism, or how his childhood maybe played into that? Yeah,
it talks about he was growing up, he had the view of a utilitarian, and then met Will McCaskill, and he just was disillusioned with everything in life, which also goes back to he doesn't really find real pleasure in things. And so then the idea of just making all your money to give it away kind of captivated him, because he thought, maybe I'll go into education. And he's like, that's kind of a sham. They're just repeating the same old speech. Who cares? So then the idea of like just making as much money as possible to give it away kind of caught his eye.
He didn't do much giving it away, though. I think that's one head scratcher.
No, I mean, I think overall he's probably taken like 10 billion more than he's given away. So that's, I mean, it's impressive inflow outflow. And it is like it's also just in hindsight so like scummy and so disgusting that we have that whole donate to the FTX Foundation, and like all these people donated. Like a bunch of my friends were in competitions to stay on the leaderboard, and this money that people thought was going to a charity was just going to like pay back loans and screw everybody over. Like,
yeah, that's something that I don't see how he can kind of justify that with the all dollars are fungible. You never like nothing. No money went to any cause.
Yeah.
But all dollars are
it's hard to
fungible.
It's a hard one to grapple with.
So what are you anticipating? What do you think, or what might are you paying attention, or are you going to pay attention to the trial, or are you keen to kind of what are you interested in maybe seeing?
So I think like my guess is what's going to happen is Sam's going to play essentially dumb, but also like try to bog people down with technicalities, right? So like I think what he's going to say is something like it was just a spot margin borrow, right? Like FTX clearly allowed for spot margin borrows, and then like get into the weeds on how all this worked and how Alameda was able to borrow this because they had so much collateral, and throw out big numbers like we had 100 billion of collateral. You should be able to borrow 10 billion against 100 billion. And then, it turns out that our margining systems weren't as good.
So that's the argument, is that Alameda was insanely over collateralized on FTX. But with what type of assets? I mean,
it's not even the type of assets. Like that. Okay. So you're saying they had a normal spot margin borrow. All right. FTX was built so that a single asset, like a very large position, a single asset, doesn't pose a huge risk to the exchange. So one, locked Solana, locked Maps, locked Oxy, locked Serum. FTX doesn't count locked assets as collateral. So to say, to include those in the balance that you're saying we had all this money that we borrowed against, no, your own systems hold those as collateral of zero. So, all right, we'll write that off. And two, the way that collateral contribution worked, the bigger your position, either for collateral contribution or for the size of like a futures position, the larger it is in a particular asset, the larger the either collateral contribution haircut gets, or the more collateral requirement it has for a position. So if you run the numbers on the entire supply of FTT at $40, not at 24, but at 40, and all of Serum at like, I think $2 is where I ran it, maybe $1, you get like $2.5 or $3 billion of collateral, even though the face value is like 40 billion. And so you built a system that knows that there is an inherent risk in taking face value for any coin in massive size. So you built a haircut system, dude, to deal with that. But then when you borrowed assets, you didn't employ the same margining system you require everybody else to play by on your own borrow. Why wouldn't you do that, right? So like, I think it's obvious that he knew what he was doing. If it was just a normal spot margin borrow, why wouldn't they use the same margining, the same system, take from the same pool of assets? System. Exactly.
And that's what he'll have a more difficult time trying to explain away.
Yeah. And then at the same time, how do you explain us having zero assets or zero coins in assets that weren't available for spot margin borrows? Right. So like I deposited, for sake of argument, Tezos, and we don't support Tezos for spot margin borrows. Why do we have zero?
Why would that Tezos be? Why would that be touched?
Right, it can't be, right. Per our TOS, it can't be touched, and yet it's not there. So
has he answered that you've seen that specific point on the borrow?
No, because he can get into the weed. Like he always talks with people who know maybe a very surface level, but never anybody who actually knows enough to push him. So like he talks about the terms, but like, dude, I've gone over the terms. It explicitly says we can't touch those assets. And then he goes, well, yeah, there's one part that talks about intermediaries. And he's like, yeah. And it's talking about like North Dimension or whatever. But no, that's also not, in our TOS, we refer to any of those entities as affiliated entities. That's how we refer to Alameda when it comes to what rights they have on the exchange and things like that. And the third-party intermediaries are meant for payment services, right? Like if we use, I think PaySafe is, or Transactive or like any of the, and they take the money, then we can say, guys, like, that's not on us. It is 100% not to say, hey, you deposited in this other entity. That's also ours, by the way, which means we can just steal the money, even though that's where we sent you to payment. And it is our fault that the money's gone. Like, tough luck. That is not what the TOS says. And that's what Sam's trying to say it says, which nah. And so he's able to kind of give enough technicality, right? Like in, section schedule 1, term 3B, it says this. And then people are like, oh, I don't really I haven't read that. I don't know how to push back. But if you actually do read it, then you're like, well, no, that's not what that says at all. And so that's why I got really frustrated when he was doing all these interviews right after FTX blew up. And he's like, well, it's a spot margin bar. And people are like, oh, okay. All right. And they kind of just have to accept it. And it's like, yeah, you fucking liar. Like, no, but nobody knows enough to push you on it.
Yeah. Well, I mean, that'll all sort of be hashed out in court, I'm sure.
Yeah, I hope so.
Yeah. I mean, it's a shame that we can't have you kind of cross-examine him.
Yeah. So when one of the big interviewers, they're like, hey, we have a call with Sam coming up. And like, what are some questions we could ask him? And I was like, all right, I'll tell you what's going to happen. If I give you these questions, you're going to ask him, he's going to give you an answer, and you're not going to know how to go to the next level for whatever he says. So I was like, can you have me as like a guest? And then like, I can come and be like, ha, Sam, that's not how that works. And they're like, no, journalistic integrity won't let us do that. But I was really hoping that like I could have an opportunity to hop in and be like, gotcha, bitch. But
you could sit, like a Dave Chappelle.
Yeah.
Yeah, well, yeah, I mean, to be a fly on the wall, lurking in the background. I mean, I want to be respectful of your time, especially since it's getting a little bit later in the afternoon over there. So, what else are you excited about these days? I feel like it's kind of funny. A lot of people who kind of got burnt the most in this industry last year, they're all kind of trying to do something remotely in DeFi. You haven't been disenfranchised by crypto yet. I think it would take a lot more than a $40 billion exchange collapsing than that. Maybe $100 billion exchange. So what are you excited about?
Let's not wish that. To be honest, like, yeah, I'm excited to see the direction that things keep going. Like, I just also think, there are people in the space that are doing awesome stuff. Like, the Bitfinex team. Like, I don't know if you played around with Keat. Have you ever tried Keat?
Yeah.
It's awesome, right? Like, it's such a cool product, and it's free. And they're like not really monetizing it, and so like I think that now we have a lot of these people that have been in crypto for a long time that are like quite idealistic and are building out really cool products, and I think that's awesome. And as we talked about earlier, is regulations keep making it more and more of a pain in the ass to interact with crypto. I think we'll see more and more great DeFi projects spring up and kind of rebuild the infrastructure in a decentralized manner, which is exciting. The Craig Wright fiasco going on, that's fascinating, right? What's going on with Suju, also very interesting. Especially, I wasn't very happy to see his redemption arc, and then like he came after me over some bullshit that I helped Alameda when I was working at B2C2. So, a little happy to see him get his comeuppance. And yeah, I don't know. There's a lot to be excited about, man.
It's interesting.
The halving's coming up, and then
right.
things always get interesting after that. So, I think just going to bide my time for a little bit longer in this bear market, and then
fantastic.
Enjoy the bull.
And we will see you in the bull. Well, Zane, thanks so much for taking the time to join the program. Appreciate it.
My pleasure. Thank you, Frank. Great to be here.
Of course. And the Scoop will be back for you again with another great guest. Have an awesome day.